everyone. Good morning, good afternoon, and good evening to all the global listeners. It's a real pleasure to be here. I'm Maia Benzimra. I'm the co-founder of Benzimra Co. And we are a Web3 native strategy, marketing, and technical consultancy supporting businesses on-chain to build, launch, and scale. This is the second episode of the Founders Ledger, a platform which is basically showing some of the most incredible voices in Web3 who are doing the groundwork, driving professionalism within our industry. We're going to use this space to provide founders with value and advice and knowledge. Today, we have the very impressive Mona, who's a very good friend of mine, someone I respect highly, doing amazing work across the venture capital space. Hi, Mona. Would you like to introduce yourself?
Hi. Thanks so much for having me. I'm excited to be here. As Maia mentioned, I'm Mona. I am the head of investments at Tokentis Investment AG, German publicly listed entity looking after all the blockchain-related investments. And I'm also a venture partner at Edge Capital, which is a DeFi hedge fund based globally.
Lovely. So I always like to start off with my guests to talk about how we met, the environment in which we met in. As I've said prior on this show, I've got the privilege of having a very strong network. And what I'm so excited about with the Founders Ledger is that we have so many individuals around us with real knowledge and real experience, and these are the people that are doing the real work in the space. So I've been very, very lucky to create this platform. So we obviously met in Dubai. We were introduced through a very lovely group of women who are strong-minded, super professional. And I think what was really nice about that time is that we all came together and were able to really support each other as expats. And you obviously do a lot of work in the UAE, so I'd love to hear a little bit about your experience as an executive there. What drew you towards it? What type of work do you do there?
Yeah, absolutely. Great question. I am originally from Germany. I spent quite a lot of time living in London, and I also lived across a few other places around the world. But I chose Dubai as kind of my main base for the past 1.5 years and also going forward because, like you said, Maya, I think there's a really strong atmosphere of very entrepreneurial, very strong women and overall people that are really trying to build something and that are able to do so because Dubai is also very innovative. They're very tech forward. They tend not to put regulations in place that are stifling growth, but are trying to put regulation in place that is actually enabling further innovation, but also consumer protection at the same time. And I think it's one of the few countries that at least I was allowed to live in that actually, has this mindset and the ability to act in such a forward-thinking way and also very fast. And I love that about Dubai. I love that, about meeting people like you and the other ladies and men that, I've got to meet across my time or during my time in Dubai. So it's really, really a very innovative and exciting place to be, given that there are so many people that are just really, really impressive.
Yeah, I've met so many impressive people and have really upped my network and been able to leverage so many amazing opportunities. And it makes you level up as an individual, I think, being there. So I would say if anyone is interested in taking that leap of moving there, whether you're an entrepreneur or your firm is requiring you to be out there, it's definitely a move that I would experiment with as a professional in this industry. I think a lot of people are on the precipice of either setting up a company there or moving out there with their company. Just speaking directly to those individuals, do you have any tips doing business there? Any tips on making friends or what the environment is like? having been somebody that's gone into the space and has been very successful in the UAE?
Yeah, my honest advice would be put yourself out there in the sense of attend events, go to conferences if they're within the industry that you're building in. If you are sporty, go to clubs to meet people. For example, if you love paddle, there's a lot of paddle related activities, but there are running clubs, obviously a lot of classes that you can attend. If you're not so much into sport, there's also a lot of other things that you can go to and just make yourself known, go and look for the opportunities out there depending on what you enjoy doing, and you'll find that you actually can meet people from all over the world very, very easily, because everyone is like us, right? Everyone, or most people are expats. Most people are there to build something. Most people are there to find new friends, to expand their network professionally and personally. So actually there's quite a lot of opportunity, but you definitely have to go out and look for it, right? Like we met, at a women's related dinner, and I think we also had a karaoke night as well. And but we chose to go to them, right? And we chose to meet the other women in this space, and therefore build our network. So I think just looking out for those opportunity and actually just going. I know for some people that's very difficult because it requires, jumping a little bit over your shadow if you're maybe not as extroverted, or just like a little bit more conscious of maybe going to a place where you don't know anybody, which I totally understand. But my experience has been really positive, professionally, going to events and conferences, as well as, personally.
Yeah, I feel like the deal flows much faster there. People are more up for doing deals. I find that they're closing a lot faster. And also for me with the UAE, I find that people are just much more keen to help you. I've had a very positive experience with the people that I've met there that genuine and help you get to where you want to be in the place. So I think if anyone's considering it, it's definitely, I'm sure that they can reach out to either of us and get more advice.
Yeah, absolutely. I completely agree. And if you are a startup, there's also a lot of accelerators, a lot of programs that help you have a soft landing in the region, help you navigate cultural aspects, navigate regional, company setups. I work very closely with Hub 71 on the digital assets team there through the program coordinator. And it's been really, really incredible to see how supported the startups are and how they come from all over the world, the United States, from India, from Germany, from you name it, UK, etc. And they come and they really get a lot of support on how to navigate the Middle East in general. And I think that's super valuable. But there's not just Hub 71, there are other programs as well, not just in Abu Dhabi, but also in Dubai, in Saudi Arabia, etc. So there's really a lot, if you are interested, to set up your company or get a little bit of support. There are a lot of programs that are very, very helpful and not at all taking a lot of equity or taking away from you, but actually very giving, because there's a big push towards bringing incredible founders and incredible businesses to the region. And I value that highly, because as an investor and as people, who are building businesses ourselves, that I think is very helpful for us as well.
Yeah, I couldn't believe how easy it was for us to set up in the UAE. I think it took us 3 days and we were so supported, and we were able to be so open about our Web3 services, something that is just not doable in the UK. So it was so refreshing, honestly.
And where did you choose? Did you choose Dubai, Abu Dhabi?
We did RAC.
Ah, yes.
Yeah. Okay. So Mona, you have a outstanding career. I've been studying it obviously more so in the last few days, aside from our conversations that we have personally. You've always been someone that I find to be very, very professional and impressive individual. I think you've got such a eclectic career. It would be really interesting for you to talk us through that a little bit, because you've gone from some serious corporate roles with some of the largest consultancies in the world, to, you know, chief of staff at some serious crypto companies. So let's talk a little bit about your background and how you made that jump from corporate into Web3.
Yeah, happy to share that. And, you know, I can only give that back. You're also very impressive founder and builder and go-getter. So yeah, very, very much, you know, give that back to you. And I appreciate the kind words. Yeah, so to my journey, it's definitely not been linear. That's for sure. I don't know if you know this, these typical, you know, memes or pictures where it says, a career is never like this. It's always like with a crazy little topsy-turvy, you know, flywheel in the middle and left, right, up, down, and then somewhere ends up at the top there, hopefully. But yeah, that's kind of how I feel. So yes, I started out my career in London as a strategy consultant for about 4 years, working at PwC Strategy and so very large, you know, consulting company focused there specifically on strategy consulting, and actually really enjoyed my time as a consultant. I think doing that at the beginning of my career, when you have so much excitement and so much energy, and you know, I thought that was a very good start. Also, you know, back then, it's actually quite a long time ago, believe it or not. At 2014, I started as a consultant. But I really, there were not as many, I think, opportunities as there are now. At least I think, you know, young college grads were not encouraged to do as much entrepreneurial stuff as I think is standard now. But that's okay. I did enjoy my time in the consulting world, and I learned what I love about consulting, which was having to really think about different topics, different industries very quickly, learn them very well, and become an expert and an advisor in things very, very fast. So context switching, but also, you know, really having an opinion, researching, and then also providing some sort of output, as well as analysis, was something that I did really enjoy. But I felt like, you know, I couldn't have immediate impact, because you're kind of doing initial strategy work, and then you see what happens, you know, if the company actually implements this or how they implement this. So I went actually after my consulting career, and I went back to Germany, and I started building out the European market for an education technology company, which now is a unicorn, actually. So it did really well. And my part in that, hopefully, was that, you know, I helped them build out Europe, specifically Germany, Austria, Switzerland, German-speaking regions. And that was very interesting, because here I got to learn what I love about building a business, which was, you know, having immediate impact, you know, having direct decision-making power, and also being able to see the direct failures and the impact that makes, right? So having that responsibility was something that I really loved. And I actually thought about, okay, what career combines entrepreneurial spirit and exposure with kind of more, I guess, research and analytics, and ended up kind of thinking that venture capital is the perfect stage for this. And in order to get into venture capital, it wasn't an easy, you know, it's not an easy job. It's not like you apply to thousands of companies, because there are not thousands of companies, and there are definitely not that many roles. So it was a challenge. And so I decided to do an MBA at INSEAD in Singapore and in France, and focused very much on, you know, taking every venture capital and private equity course that I could get my hands on, and graduated right during the COVID pandemic. So that was a little bit tricky for sure. And remembered back when I was in my undergraduate that I had actually learned about Bitcoin back then. And the reason was I read the Bitcoin white paper during my undergraduate studies, and I realized what I really liked about this was the philosophy about banking the unbanked, about giving everyone an opportunity to participate in the financial markets. And that kind of always stuck with me. I probably wasn't brave enough back then to make a career out of the digital asset interest. But after my MBA during the COVID pandemic, I realized that actually I think this is the future. I think this is where we're going. And instead of going directly into venture, I decided to work as chief of staff, as you had mentioned, for a cryptocurrency fintech called Bitwala in Berlin. And to finish the story, after a year working with Bitwala, I received an offer to work for a German venture fund, which is Tokentos Investments, and started initially as an investment manager, and then became the head of investments for the company, which I am still working with today, but also have expanded, my mandate across working also with a hedge fund called Edge Capital, where I'm the venture partner looking at a lot of the venture deals, and building out another arm with Edge Capital as well. And as mentioned, also work with Hub 71. So really started to use all the knowledge I have built, all the connections I have built, similar to what you do, to try to provide value across a variety of different areas, because I think, we can do so much. And really, use our knowledge, use our network across a variety of different things. And here we are. This is where I ended up.
Amazing. It's a truly amazing story. So you actually leveraged Web3 to enter the space that you wanted to be in. And you found that the MBA was a big part of that. Is it something you would recommend for people? I'd love to hear a little bit more about the MBA side.
Yeah, absolutely. And this is a really good point, actually, very, very attentive for you to pick that up. I think one point was that actually having a niche interest, having niche knowledge in something like the blockchain technology space really helped to enter the venture capital space. Because I really think that this gave me an edge, right? This gave me an opportunity to showcase my knowledge of an industry within an investor role, rather than being a financial services professional first. So I can really advise, if you want to go into venture capital and you have a niche interest or a strong industry focus prior, that is a great way to enter the space and really look at VCs that are actually investing in the space that you have specific expertise in, ideally also real hands-on experience. And then the MBA, to get back to your question, the MBA was really fundamental for me, I think, in terms of network. Right. I really think that the MBA network, INSEAD, for those who don't know, it's a global MBA school. It has a variety of campuses, including Abu Dhabi as well, and it's a very, very great way to build a really international network. And that has helped me a lot in the venture space. I would also say a lot of people, I think, are skeptical of MBAs, which I also understand, to be fair. I think that the arguments against an MBA are good. But I also saw a lot of my classmates, a lot of my wonderful friends that I made there, who really use the MBA to change their career completely, right? And go into something completely different. And without it, it probably would have been a lot harder for them, maybe even impossible. So if you are somebody who wants to change their career and might need a few building blocks of knowledge that are missing, doing an MBA, I think, is a really good way to actually, work a little bit alongside, get internships again in that industry, even if you're already, have 6, 7, 8 years of work experience, but then still have an opportunity to almost start on a blank slate, but in a more senior position in the industry that you want to go into, like VC.
Yeah, and I mean, I guess you already had the core fundamental skills of being able to assess businesses very quickly because of your consulting. So that's kind of why I was like, I wonder what it was that needed to have the MBA to maybe enter that world. So it sounds like the network was a big part of it, because it sounds like you probably could have done the work prior, you know?
I think the funny thing in this world is, and I think it is changing. I think these things are really rapidly changing. But when we look at, the time that I was in, and still relevant to some degree today, people really wanted to hire someone as a venture capitalist who had an investment banking background. And it was like almost like you had a prescribed, CV that made you a good analyst whereas the reality of venture capital, specifically for early stage businesses, is there's no numbers to evaluate, right?
Yeah.
Not in the depth of a pre-IPO company, because the company probably doesn't even exist yet, or at least has a few customers, but very, very basic P&L. So long story short, I think the MBA just gave that stamp of approval, really. Whereas I really hope and I really think that this is actually changing nowadays, and people are much more open to people across all kinds of, backgrounds, versus having like you have to have a financial services background in order to become a venture capitalist, which to me still to this day makes absolutely no sense.
Absolutely. I mean, for me, how I've worked with projects has been actually just getting them in a position where they are able to raise capital. They look professional, they understand what their product market fit is, and we've raised significant amount of capital for our clients. But have I got a huge venture capital background? No, but I understand very deeply what products are going to be adopted on both retail and institutional. So I think it's a very interesting landscape, and definitely changing just as businesses become more modern in tech as well. I mean, yeah, it's going to become multifaceted, I think, as we move forward. And I'd like to talk a little bit about the present moment, because you're working across a lot in this world. So I think there's obviously loads of founders right now that are raising maybe their early stage, maybe their Series A. There's a lot going on in the AI space that's obviously absorbing a lot of the attention, but there are still big raises happening on the crypto side. I know that you work between both. So I just love a bit of a full picture of what you're seeing at the moment with somebody that's so on the ground in this current time.
Sure. And maybe I can answer that question in like twofold. One, I guess, what I think is required at the moment to be able to actually successfully raise, and then also a little bit how I see the market. So that hopefully, helps founders who are listening at least see it at the moment, including myself. One thing, if you are an early stage startup, and I'm really speaking pre-seed, seed, maybe seed extension rounds, prior to a Series A, founder quality is the most important thing, and the team composition as well. And what I mean with that is a founder who is obsessed with a problem, who really wants to solve a real problem and focuses him or herself on this, as well as their team is able to attract very strong talent, right? Attract very good teammates, attract good co-founders if they are initially solo, in order to build something that is going to be a category definer, right? And the third thing I think is speed of learning, right? Can they adapt? Can they learn? Can they not get bogged down by, a difficult market? Because in the end, you need to maybe pivot a little bit, and that happens to almost everyone. So it's not a failure. It's actually great, because it's part of the journey of becoming, a founder. You're not going to be, in a year's time, in a pre-IPO company, and nobody expects that, right? Even venture capitalists don't expect that within that short period of time. So you are allowed to pivot, but be obsessed with the problem, or attract really strong talent around you, and learn and adapt. I think that's kind of the founder quality bucket that I think is very, very important. And then a little bit more tangible maybe is market timing, right? Is the market becoming inevitable? You know, are you as a founder, are you surfing a wave, or are you starting to fight because your market timing is off? That is a very, very important aspect as well. Because I've seen phenomenal founders with a phenomenal product, really exceptionally well, but they were just too early. And they ran out of runway because they paid themselves maybe a little bit too much, or they didn't manage the burn rate very well. The market went into a downturn. There wasn't really demand for the product. Fundraising got really hard, right? And then if they would have been able to, you know, survive 6, 9, 12 months longer, they then would have been at the right place at the right time. So market timing is really important. I know it's not always that easy to time it, but I guess, you know, working with people like you or working with experts is also something. If you're not so confident and if your solution is ready, if the market is becoming inevitable, then like ask, right? Get help, because market timing is an important part. And then I think third point on what I think early stage founders need to really look for is most founders in the web, I'm speaking specifically Web3, by the way, right? Most founders in the Web3 space really focus on product, really build really strong tech, are really like tech obsessed. But the problem is there's no distribution, there's no demand, and there are no customers for that product a lot of the time. And that becomes very, very difficult. So when you're building in the Web3 space, you have to think about distribution, right? Who's actually going to buy this? Who's actually going to pay for this? And how much? So that really clear assumption, and you can make a really clear projection on if this is the right product, if this is the right market timing, and if you have the right distribution channels for this product or service. Because otherwise you may have the best technology, but if you're not in the right, you know, market timing, and if you don't have anyone wanting to buy it right now, then it becomes you know, you're fighting against waves which you just won't be able to fight against. So I really don't think that the startups die because their technology fails. A lot of the time in the Web3 space, the technology is exceptional. They die because the distribution fails. And that's where, you know, getting help can really be valuable, or you know, not doing everything yourself, getting a strong team, you know, doing research, speaking to people, going to conferences, understanding what the competitive market is doing is very, very, very important.
And it must be, I mean, it sounds like you guys have experienced this maybe quite a few times where you've actually spotted that this is something that is a gap in the market. It's very interesting, it's very investable, it's got the potential to be adopted, but maybe they're a little bit early. So I'd be very interested, what's your processes to check that? Like, do you look and see where the market currently stands? If you feel like this is a significant gap, it would be really interesting, I think, for individuals that are designing, you know, new tech to understand how maybe a VC would approach that.
It's a good question. I think, you know, we also don't have the magic wand.
Yeah.
So this is also research, and also, you know, our kind of, to some degree, also opinion based on research and analytics, which may or may not be correct, right? This is also important to note. But an example to answer the question, maybe if we look at real world asset tokenization, for example, right? Like, this has been a topic that people have been building in for a very long time, right? The past 3-4 years, but really, really receiving the right attention, receiving institutional adoption, receiving more interest across a wider variety of real world asset is really only coming to fruition now, in my opinion.
That's a very good example.
And so all of those companies that had an incredible idea like 5 years ago, you know, will have had to have enough runway and enough stamina to survive and reiterating their product and adapting to the market, to actually now starting to see the demand and the distribution ability.
Yeah.
And that is tough, right? Because we all were like, yes, this is a great idea, right?
Yeah.
This is the future. So absolutely, we need to invest, we need to build, we need to go for this. And I believe, arguably, I think most of us, investors and builders, probably thought we would see a little bit more adoption a lot earlier than we're actually seeing. But then it comes down to, okay, if this is the case, then how are you keeping yourself alive, right? Because if that's what you believe is going to happen and you see snippets of it actually coming, then how can you survive
yourself?
Exactly.
And I think we have the tendency to be very aggressive in the Web3 space because there is so much competition. I think founders, we get this kind of competitive comparison syndrome where we see founders that appear to be successful overnight, and we kind of try and almost pivot to be like some of the hype, and that can really be detrimental. I always try and advise founders to stay on their path. Obviously, I'm a fan of pivoting when necessary, but for example, a very good example, the RWA industry. And like, I'd like to pick your brain a bit as to why you think potentially it has taken a bit longer to progress. But from my perspective, it's required the infrastructure, right? Like, we're talking about a completely new financial system and trading completely different types of assets. And that is going to take quite a long time. And at the end of the day, we do need that institutional adoption to make it viable for retail and for capital markets as a whole. So I don't think we could have expected that to happen overnight, to be honest.
Completely agree. I think I echo what you said. Absolutely. And to maybe add one point, I also think that we need to rebuild trust as well with the audience outside the Web3 space, with the institutional audience. And like you said, the rails need to be there, the infrastructure needs to be of a certain level, the trust needs to be there, the projects need to be there, and then the demand needs to be there. So I think we have had definite setbacks. We've had the development was definitely slower, I think, than we expected. The institutional interest has been slower than expected. But yeah, I don't think we were ready. But slowly,
I think you're so right about the trust thing. And I think it's a very pivotal time in our industry. And I think I'm seeing a lot of people kind of pivot out of the space and move into other areas in tech. And I think that's completely respectable. But people like ourselves that have been a part of on-chain finance really since its inception, and the few people that are still here trying to professionalize the industry, really seeing its potential, I think that there needs to be a little bit of respect for that, because it's tough. It's a tough time. It's hard work. It's very difficult to get this industry to the level of professionalism that it deserves to be at. And I think the last market that we experienced has definitely, on the bull run side, has definitely exposed a lot of things that just can't be a part of the future in crypto, really, to be honest.
I completely agree. Yeah, I don't think I have much to add there. I think that's very well put. And I actually think, when there's a change and a shift in market and sentiment, in general industry changes, then we see those surviving who really have strong potential to survive and who are building something for the long run. And I think we're starting to see that now. So I actually think, we're on a really good trajectory in some ways. But it is a tough time, and we're weeding out, I think, a lot of builders who were in it for the short run, but also understandably so, who are now building maybe in other frontier tech areas that they might find more promising for the future, which I think is also a fair argument.
Yeah, and you're obviously working with a fair amount of early stage founders that are building in this environment. Have you got any advice for them at this time?
Yeah, I think you touched upon it earlier, right? The fundraising is tough, and then I don't think I addressed that directly. So maybe I can answer it in the context of this, which I think
That's great.
Fundraising is tough for everyone, but it is unevenly tough, if that makes sense. So I think companies with real traction, real customers, and a clear market to win over the ones who have a vision but very limited evidence at the moment. So that is what you need to think about as a founder. And look, I totally understand. You're building something and it is your baby and you love it and you're really like focused on it. And then the market is actually responding to you in a way that's not validating your idea. This is very, very tough to accept, but it is not a market that you can raise on vision and potential. This is a market that you have to have genuine technical differentiation, very strong founding team, rapid revenue growth potential. You're solving a clear problem that is relevant today, right? And you're really looking at real adoption, real users. You're looking at infrastructure that enables new markets. There is a new agentic, digital autonomous economy that is evolving as we speak. There is a lot of infrastructure that is missing. Big companies, our big Anthropics, our big OpenAIs, our big Googles are building, but there are areas, where even Web3 founders, in my opinion, having the blockchain rails can really enable, trust, coordination, also financial transactions on a more autonomous basis. And so these are examples maybe where you could be building something that is actually, I think, going to become relevant very, very fast. In the next 6 months, I think we're going to see much more need and demand for these infrastructure plays. But this is just an example. I'm just using it to help, my argument a little bit. But overall, if it's just about token speculation, if you're doing a DeFi copycat protocol, if you're going out there without really thinking about the business model, if it's not a sustainable business model, if it doesn't have revenue growth potential, right now, and hopefully forever, and honestly, but right now for sure, you will not have a chance to raise because investors also got sharper. And, we also have to invest in companies where we can really underwrite the risk. And at the moment, I think the risk profile is much higher in terms of we want to reduce the risk significantly more than in a bull market and when the sentiment was definitely different a while ago.
So what does an investable product look like to you?
So I would say, again, the market isn't rewarding potential. The market is rewarding proof, right? So real customer demand, real adoption, clear execution, understanding that this market may be not as bullish for a while. We don't know. So raising enough money at a viable valuation in order to, sustain longer periods of drought potentially, right? So I would say the challenge is that we need to see evidence, and this is a much bigger need than it was a few years ago. So really think about
the commercial side.
Yes. And honestly, even say that you raise venture money, build a business that can live without venture money. In later iterations, because you as a founder, you want to not give away as much equity, probably, right? Or you want to bring in strategic investors that are helping your growth. But you also want to build a business that is sustainable and that is, if you want to be acquired, that is an attractive acquisition company, or if you want to go IPO, that you are actually building a sustainable company based on fundamentals. And I think we had a very different view of this a while ago.
But it wasn't even that long ago.
Yeah, it wasn't that long. Yeah, exactly.
But this is obviously I've got a very large investor network, and this has been the primary thing within every conversation when I ask that question. So what does it actually take to be investable? Market traction, demand, validating the demand, validating that this is actually a gap to be fulfilled, which I think does put founders in a very difficult situation. It's a bit chicken and egg. But there is so much that you can do nowadays, like, yeah, with AI, with putting a lot of skin in the game of, and I think it's a good thing. I think we're in a good position where we're having to be a little bit more serious. We're having to think about sustainability, because it's going to make our industry level up, because it's not sustainable to have huge amounts of capital flowing into projects that aren't sustainable. So it does need to happen.
I completely agree. And to maybe, also show the other side of the coin, VCs also have to adapt. It's not just founders, it's actually specifically Web3 VCs, because we are now also competing against AI, because AI will allow you to get a whole fleet of engineers at a much, at a fraction of the cost that you would have had to, raise venture money to hire all the engineers, for example, and the marketing team and the right now. A lot of this can actually be done through, consistently improving AI mechanisms. So arguably founders don't need as much capital as they used to. And so it is also important for the VCs to adapt. We all need to adapt, right, to a new and evolving world. And there are, of course, lots of issues with the AI and hallucination. And I still believe a human touch and human experience is very, 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 very important. But on the grand scheme of things, a person in college can probably build a prototype now very, very fast, or even a website for their project and check out, how much demand there is to put their name on the whitelist in a much, much cheaper and quicker time frame than it was even 2 years ago, where, you thought twice if you hire an engineer to help you build out your initial prototype if you maybe don't have capital to start with.
Yeah, and I think that is the assumption for sure. But because we're in such an early space within this, and because it's happening at such a rapid rate, and there's this huge expectation that we can build more, ship more, do more, and there's like mounting pressure, like there's almost like AI burnout that's kind of creeping up on people. For me, like I'm genuinely 70% more productive. But like, what does that mean? That means I also then need to catch up with all the other things. But that's another side of it.
It's true. No, I completely agree. I think it's there's always two sides, and there's always cons for sure. But I do think that we all have to and are allowed to adapt to a new technological landscape.
We have to. We absolutely have to. But I'm just wondering, in 2-3 years, how's that going to look? What will be the result of it? And then I think it can be truly accessible on the quality, on, has there been more unicorns? Have there been more successful companies? Is the output better? Are we actually doing better marketing through using AI? Are we building better products? Because I think it's now really exciting. We've got this like brand new shiny toy, and it's like really, really attractive, and everyone's like going crazy over it. But we haven't really got the data yet. I think we're starting to, but it's going to be very interesting how VCs will adapt, how startups will adapt, how founders will adapt. And I'm very much looking forward to seeing how it's actually going to shape the world of business, especially in tech.
Completely agree. And I think you mentioned it as well. And probably the answer lies somewhere in the middle, right? That you use AI as a support and a productivity tool and a way to enhance features, but potentially not to fully replace experience, to fully replace innovative, first principle thinking, with maybe more generic products that fail fast, which again, like you said, we will see. I'm also looking forward to the data, but it is important for all of us to stay.
It's almost like we're all having to acquire a new skill of understanding what should and shouldn't be automated,
Yeah, yeah. And become orchestrators, right? Like kind of.
Yeah. You're like, should I, be doing this with the team, or maybe I should brainstorm a bit with AI first. Like, it's very, very interesting, and I think we'll all figure it out. But right now, it's so new, and I'm really looking forward to seeing some of the companies that crop up that are just completely done like solo foundership. And there's a lot of noise right now, but the real data, like we were just saying, it's going to be very interesting for sure.
Yeah.
So what are you excited about at the moment?
Look, I'm a very excitable person, so I get excited quite easily. But I think what is really exciting is that we're in a builder's market. I see some incredible founders, really, really incredible, that are plowing through, and I think that is very, 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 very exciting. I also think in terms of generally what are the interesting topics, right? What excites me, I still think that this autonomous economy infrastructure, where I'm thinking a lot about agent to agent interaction around transactions. This could be payments, this could be buying things, this could be actually going out and acting like an independent travel agent, and having the rails in place for this to manage. I also think that a lot of the data that can be collected to use that for robotics is also a very, very interesting, area to look at. Yeah. To go back to the blockchain space, I also think the stable coins are still, the future. I think there's a lot of opportunity still in the stablecoin infrastructure space. It is very saturated for sure, but I think it's still worth keeping our eyes and ears open for that. As well as RWAs, like we discussed, issuance, settlement, as well as generally creating a whole market for real world assets that are tokenized, that are on chain. Also, the institutionalization of a few of the things. I came in with a bit other side of the coin philosophy of why I like chain tech. I also have to take a deep breath and be like, why is this good? But I do see some positives for bringing in a more a grown up into the room, so to speak, even though I still strongly believe in one of the most valuable aspects around blockchain technology is really to bank the unbanked and to give everyone an opportunity to participate in the financial system, and I think that's very important. But what else? I think also, utilizing blockchain technology to, for example, verify AI, verify, your agent, for example. I think there's a lot of opportunity in the trust, as well as like coordination space. And then, of course, there's also big aspects around finance, where blockchain and artificial intelligence really have a lot of opportunities to overlap and build really strong products for the future, or even infrastructure rails really for the future, that are not necessarily categorized as blockchain technology or even artificial intelligence. They're just, available to the consumer, who now has a whole plethora of new digital services that they can access.
So you're almost assuming that there's going to be infrastructure to combine all of this innovation and actually help fill in some of the gaps, because there's a lot. AI is evolving rapidly, and I think that we haven't necessarily seen some of the problems that could arise from it. So I think there's a multitude of businesses that could crop up to help make sure that it's sustainable, make it like, because there's obviously so many platforms as well. There's this whole token conversation. From my understanding of it, it's that a lot of these companies are almost paying for the usage, aren't they? And when that capital runs out, I mean, maybe you know a little bit more about that because it's a very interesting subject. I'm not proficient on it, so I'm sure you're more educated to speak on it, but I'd love to hear a bit more about that.
Yeah, I think we definitely are also looking at, the GPU usage aspect here, and recently spoke to a very interesting researcher on the debate CPUs or GPUs, also understanding, can you create almost like a marketplace for underutilized GPU, so compute power, right? And then having that almost like a deepen projects, reroute the capacity for different use cases. So this is an interesting area that we're actively looking at. I cannot give you a really strong thesis because actually we are really very much in the research phase, and I have to say I think we're not quite there yet. Questionable also, do we need blockchain technology for this, or is this a completely different topic around GPU usage, and what are the alternatives? And also we're looking at, for example, can you and there of course is research on this which we're really actively learning about, is if you kind of compress, for example, data, right, that you want to train your AI model on. Right now, you have all this massive data set that you're training the AI model on, but can you compress that data and train the model on a compressed set of data? And how much would that actually save in terms of compute power? And is that maybe the future, right? So we're looking at a few different, more research based topics at the moment in that capacity. Definitely not an expert yet. So this is part of my learning, which I really, really enjoy. But I would like to see where this industry goes in terms of, yes, I do think, maybe to phrase it that way, I do think that intelligence is becoming abundant. I think everyone can now access intelligence and information much, much, much easier and in a very abundant format. So what is actually now, what are the scarce elements, right? Where's scarcity being created? And compute power is one of those areas where, we're actively trying to see what is the future there. And is it a problem that startups are going to solve, or is something like that going to be solved by one of the giants, right? Where then we as investors are no longer maybe as relevant.
Yeah. So are you working on any projects at the moment that you're particularly excited about?
Yeah,
we're names. You can confidentially.
the one I just looking at in the AI space, we're actually looking at peer-to-peer content delivery network, fully automated and managed through artificial intelligence, which could reduce content streaming by up to 90%. So really a category definer in the streaming industry worldwide. The other one, as I mentioned, is this compression of data to be able to train AI models on compressed data sets rather than the large, massive data sets without any sort of compression or any sort of ability to shrink them, I guess, right, to save compute power. And then we're also very actively starting to really, like I said, trying to figure out where is that blockchain technology and AI intersection. Is it on the verification layer, right? Is it about verifying who is actually managing this AI agent or whatever it may be that is now roaming around and doing whatever it's doing? Or is it about, creating more of a coordination layer? So these are areas that we're actively researching in, and that does excite me.
So you're almost validating whether there is a crossover that makes sense. Like, do these technologies actually work, or are we just throwing blockchain in there because?
Yeah, exactly. And it's interesting because I've posted a little bit about this on LinkedIn and shared my thoughts, and I've had some very interesting responses. Also saying that the intersection doesn't exist and that it doesn't make sense. And research was sent to me actually by people saying, we've looked into this and there is no real use case. There's no real business case for this. And then others are saying, oh, we've been building in this space for ages and we're about to launch because, now is the time, and we're really solving a massive problem that a big Google cannot solve, because this does not just relate to the product suite of Google. It has to be across every single, product suite, no matter who is owning that infrastructure. And so this is an interesting debate. If people have thoughts on this or research on this, I would love to learn more. Because the more I try to learn about it and discuss about it, the more interesting insights I'm getting. And there is a divide, and I think we will see, we will see where we land.
Are you going to be releasing any of this research? Because I, for one, would love to read some.
Yeah, I am working on to be fair, it's honestly a little bit more of a blog post on this. But I am not quite ready yet. I think I need to really think through some of this, because I'm also looking at very technical data, which I'm, to be totally honest, also just having to digest maybe a bit longer than if I had a PhD in machine learning, which I do not have.
I don't think many people do.
Yeah.
All right. Well, I'm really looking forward to, everybody keep an eye on Mona's accounts, because it sounds like she's doing some of God's work here. I'm really looking forward to reading that. Thank you so much. So you've been an amazing guest, and I've really enjoyed this hour with you. I like to wrap up by asking each guest the same question, because everyone that's here has a significant amount of success, and I'm a heavy believer that the only way to be successful really is due to your mindset. So the end question for you is, what mindset did you have to build to get here, and which one did you have to leave behind?
It's a lovely question. What I had to leave behind, I think, is wanting to please everybody. I definitely used to never say no, wanted to be always helpful, always, pleasing everyone. And I reached my capacity and the genuine ability to do so with an open heart quickly, right? And then it felt forced, and I wasn't really spending my time on the most valuable things, but also not really giving totally honest feedback based on my opinion. So that is something I definitely needed to leave behind, and I needed to mature and grow out of that. And the mindset that I needed to adopt is a little bit that, everything does happen for a reason. And even if sometimes the journey may look like it's not exactly what you wanted, it actually opens up, when you look back at it, another path that you needed to take, and that opened up a completely different, world for you. So I try to see every challenge, every failure, every different turn, every pushback as an opportunity for growth. And that's not always easy, but that has really helped me to see the world in a very grateful way. And I believe just alone that attitude has just helped to be very happy and grateful for everything that happens, and that opens up a lot of doors as well.
And that's beautiful. And I think a lot of individuals starting their businesses can take that on, because that's really what you need. You need to be able to roll with the punches and maybe understand that a kink in the road or another direction can lead to something even greater. So I think that's a lovely way to end it. And I really appreciate you, Mona. And I will see you in Dubai soon.
Yes, I really appreciate you too. Thank you.